a significant amount of institutional investors are starting to now coming into the crypto market, really embracing the ETF because it's the regulated vehicle. As you say, under this current administration, it seems to be a much more favorable regulatory environment even than previous administration when it comes to crypto ETFs. So we can expect to your words like, yes, this probably will be a year of the ETF in that space as it is for other markets, but importantly, that is a vehicle where fundamental investors can invest in.
We all want to believe in something. In Chinese, belief also means trust. We want to trust our systems and each other so we can build a future beyond what we know. Join us at Consensus Hong Kong, where belief becomes real.
Hello and welcome to Markets Daily, hosted by me, Jen Sanasi. On this show, we navigate the currents shaping the crypto markets, providing insights against the broader financial landscape. So whether you're actively investing or simply fascinated in the volatility that is the crypto markets, this show is your compass to understanding what's happened, where we are, and where we're going. Joining me on today's show is Fedwatch Advisors founder, Ben Emons. Ben, welcome back.
Good morning, Jen. It's great to be back on with you.
Yeah, well, as you know, every morning we talk about what's going on in the crypto markets. They are looking pretty boring this morning. At time of recording, I'm just looking at the price of Bitcoin right now, under $97,000. Talk to me about what you're watching this morning.
Yeah, I am watching that, crypto, because it's always a good barometer of the risk sentiment in the markets. And it's subdued, actually. I think people are waiting for Powell to speak in about less than half an hour. And people are sort of taking in stride these tariff announcements by Trump because it's just becoming more of a familiar pattern, right? They're getting announced and there's a lot of fanfare about it, and then you get some counter response, but it all seems to be very measured. I think that reflects itself into the markets. You can also see that in the price of Bitcoin, not really doing it much here until we get a little bit more clarity.
Mm-hmm. I want to talk about Powell. I want to talk about the tariffs. But first, let's talk about this story because I see it gaining some traction across all of our social platforms. It's gaining traction on our site. ADA, Cardano's token, rallied this morning after Grayscale's recent spot ETF application. And this story just has me wondering, given the current administration, is this the year of the ETF? Like, what are we going to see from a crypto ETF standpoint?
Yeah, in a way, we already had it, Jen, right? I think the last time you and I spoke was that it was just launched a few months earlier, and it already sparked this sort of view that we can finally embrace crypto as an asset, fundamental asset. And it was recently news out too, I think by the Wall Street Journal, another news outlet that had reported on that a significant amount of institutional investors are starting to now coming into the crypto market, really embracing the ETF because it's the regulated vehicle. As you say, under this current administration, it seems to be a much more favorable regulatory environment even than previous administration when it comes to crypto ETFs. So we can expect to your words like, yes, this probably will be a year of the ETF in that space as it is for other markets. But importantly, that is a vehicle where fundamental investors can invest in. I think you see more and more of them embracing it and putting it in their portfolios as an asset allocation or diversification.
Are there any challenges or blockers that still exist when it comes to institutional interest and the institutional adoption of these crypto ETFs? And I ask you that because Bitcoin and Ether, I feel like, stand in their own class. Right now, we're talking about ADA ETFs, the potential for a Sol ETF, maybe an XRP. I feel like these cryptocurrencies maybe have a little bit of a further way to go when it comes to its acceptance in the mainstream and also the understanding from institutional investors. What's your perspective there?
I think the last point of an understanding, that is, I think, where there's still more research to be done because we sort of well understand Bitcoin, how that dynamic in that market is playing out every day. There's now a lot of data available, how it's traded on different exchanges and liquidations. But some of the other cryptocurrencies are less known. And there's always been concern about the space itself, like it's a technology, right? And it can be therefore affected by people doing things. And we know a lot of stories of things went wrong. So there's still a lot of concern. But there's also now the fact that if you get ETFs, that idea of wrong is in suddenly your money could disappear. That sort of story may not really be counting anymore. That's, I think, for the fundamental investor, really important, that you can trust the vehicle that you invest in. But I think the fact of how these underlying cryptocurrencies are trading, there's still somewhat more knowledge base to be gathered there, meaning you have very specialized portfolio managers out there that know how the space trades, but there's a lot of fundamental investors that probably don't. And that's, I think, the issue here. There's just slow adoption of other ETFs this year.
So what does that mean? How should we be watching the crypto ETF space?
Well, I think to your point, you likely going to see more launches coming. So a flurry of launches in the Bitcoin ETF itself. So Ethereum is sort of put on hold, and I think that maybe now following because of the approval. As that goes through and it gets more like traction, I do think you could see more of others being launched, whether it's Solana or Terra or XRP, any of those. It could potentially be, depending on the approval process, obviously, but it's possible, as in, it's obviously a regulatory issue, so, I can't speak for that, how long it's going to take, I don't know, but I just think it would probably be the case in terms of the interest that it has and the need for a ETF in this space, because that's, I think, what people want to. I don't think the fundamental investors are really willing to take actual spot crypto in their portfolios. That's still, I think, a huge reluctance to do so.
All right, let's talk about tariffs and Powell. Let's start with Powell. We know that he's going to be testifying in the Senate later today. This is part of his twice yearly testimony before Congress. What are we expecting to hear there, and how do you expect the markets to react?
Well, I think he will be somewhat what we say hawkish, right? As in, he will have a tone where he's taking an independent voice because of what's happening with the administration putting out so much policy currently, to the trade policy in particular. So he will be saying we were going to be watching those initiatives, so we're going to be calibrating accordingly, but he's not going to take a view on any of those items, particularly on trade and tariffs. Other than, I think people will be curious, like, there's already some economic analysis done on this, like what would it do, right? What happens here when you get these 25% tariffs on steel and aluminum now, or maybe in March the tariffs on Canada and Mexico happen after all, what will then happen? So some scenario analysis he will be questioned on. I think he will be coming back to, like, the economy's in good shape, it's strong, we can stay on hold here, we don't have to be in a rush to cut rates, but still projecting out that there will be a possibility to bring rates down. And at the same time, being very mindful of the independence of the Fed. I think he will overemphasize that in this testimony, is my take, my own view, simply because of what's happening with the flurry of policy announcements we're seeing coming out of the Trump administration.
Do you think we're still going to see 2 rate cuts this year?
I think it's possible, Jen, but it's market pricing, right? That where we are currently, and it's a bit less than 2. And as we know, that market pricing is very quickly influenced by any type of data point. So it still remains a very data-dependent rate cut, so to speak. It's not set in stone. There are some Fed members that have already come out saying, like, we have to keep in mind what these tariffs could do to inflation, and if it does drive inflation up, we may not be able to cut rates, something in that nature. So where Powell has probably going to take some view there too. So it's just not guaranteed, I think. So it really depends on how inflation behaves from here. We're going to get inflation tomorrow. So it will be interesting to see what's the impact of late. It still looks like an inflation environment that's stickier than normal. Hence, this Fed will be more restrictive and potentially on hold for a few meetings.
A lot of analysts that have been commenting on these tariffs have really said that the president is using them as a negotiating tactic. Markets really reacted to the first tariff announcement on Canada and Mexico. Then when it was announced that, we have a month timeline to figure out some negotiations, the markets kind of bounced back. Now we have the steel and aluminum tariff announcement from Trump. Just curious to get your perspective. Do you think this is a negotiating tactic, or do you think we are going to see tariffs implemented on some of the U.S.'s allies as we head deeper into 2025?
Yeah, it could be. I think the response by Europe was interesting this morning. They want to be firm, but they want to be proportionate. And that word proportionate, that's what markets are responding to. Okay, so Trump comes out with 25%, which is a high number, but the EU is not immediately swinging for the fences themselves. And I think this is where markets are, why they're subdued currently as these announcements come out, because if Europe would announce, like, well, okay, Trump, great, we're going to put also 25% on, guess what, even more, on your exports to us, then the trade war is really on, right? There's going to be then more tension in markets about how will this really play out. As you say, it's a negotiation. Therefore, the tariffs are a negotiation tactic, a negotiation tool. But I also think it's a signaling tool. I mean, Trump also has other, reasons why he puts on these tariffs, as we now have learned. Border protection, for example, or NATO payments, right? So things like that have nothing to do with economics, more to do with, I want other outcomes, but I'm using tariffs as a way to negotiate that. So it's all in the open, but it's proportionate response. So therefore, markets are for now subdued on this.
Now, we talked about three big narratives this morning. I keep saying them. We talked about Powell testifying today. We talked about tariffs. And we talked about 2025 potentially being the year of the ETFs. If we take all of that and we put into perspective of how crypto markets might perform in 2025, what are your thoughts there? What do you think we're going to see happen?
So if I take it in aggregate, I say this is still much of a positive risk-on type environment. It does look like that because we have a strong economy, and because we don't see any, at least for now, any kind of meaningful response by the Federal Reserve in particular to start tightening rates, right? Therefore, markets stay in this risk-on tone. That's, I think, really important part of the calculus. Like, if the Fed were to reverse course and start raising rates, then I think the environment will really shift. So in this environment of a neutral Fed with Trump trying to negotiate tariffs, I think the risk-on market will remain risk-on. As in, you have always crypto as a leading in that. So, probably we're going to go a little higher here again at some point where we get a little bit, the dust settling. At the same time, we have to keep in mind that the economy is strong. So any type of pressure on prices, could lead to overheating. So this is where markets will be sensitive. So I think it's a good market environment. Stock markets will probably go a little bit higher. Crypto markets will go a little bit higher. How high, I don't know. I cannot give the recommendation, but better environment. Whereas yields are sort of controlled at this moment, which plays a role too. So treasury yields probably going to be ranging here for a period of time.
Ben, I appreciate you joining the show today. Thank you very much.
Thank you, Jen. It was great to be on.
And thank you to our audience who watches Markets Daily every day. If you don't already do it, subscribe to our YouTube channel and give us a thumbs up. If you prefer listening to this show, we are on the CoinDesk podcast network that is available across all podcast platforms. Thanks again for listening. We will see you tomorrow.